Joining us now to discuss all of this, Joseph Schuster. He's the founder of IPO Schuster, which researches and buys into IPOs. The company's IPO index is trading near a record high reached late last month. Joseph, thanks for coming on the show again. We appreciate you having you back. Let's just talk about these IPOs and start with LinkedIn, really, because it's kind of exciting in that it's the test of social networking companies on the market. On the other hand, it's such a small percentage of the company. What do you think?
Yeah, I mean, in my opinion, definitely the LinkedIn IPO has really some key hallmarks of a late 1990 IPO from the internet age. I think the disconcerting bit, in my opinion, is only the 8.3% of percentage of equity which is offered in the company, which basically tells me that obviously it's easier to place $200 million than to sell $600 million at a much higher price. So we are cautious for this type of companies.
So, I mean, how much is it really a test of social networking sites shares trading on the market? Because it's only going to be 8% of the float, and everybody's all a Twitter, not to use another social networking term, about the IPO since it's the first one. What do you think about the long-term prospects of LinkedIn shares?
Well, I mean, let's take the short run. I believe, obviously, in the short run, it may trade to the upside. It's going to be a day trading stock for sure. In the long term, I think investors really face a company where the underlying revenues are tending to come from very different directions where they actually come right now. If you look at LinkedIn over the last 3 years, its revenues from paid subscriptions actually has halved, while the hiring solutions has doubled. So what we expect is a company which is going to face huge amount of volatility. Also, it's in its underlying business. It's not like Google has made money in search and will always be key in search. But here is actually of a company where the underlying revenues really changed dramatically.
And yet you think the prospects for pricing the IPO are good, right? I mean, they will definitely sell all the shares.
Yeah, that's very good. It obviously tops the range here. It's a very small deal. It's easy to place little amount of money with institutional investors, and obviously in the short run it should trade quite well.
Is Glencore going to be a bigger test of the market for IPOs here, because that is a massive offering?
Yes, the Glencore IPO is more a test for the global IPO market, in especially London, and then later next week in Hong Kong. Actually, it's a $11 billion deal. The Glencore really goes public in order to put a value on the firm. It gives them some cash resources to do deals, to do acquisitions, which in terms of IPOs doesn't really mean can actually mean a lot of downside risk for the respective offering.
What do you think about the IPO market in general? We mentioned that your index is at a record high here, although it's a relatively new product. Are we on the upswing? I mean, do you feel like we're on a sustainable upswing for IPOs?
Yeah, absolutely. We are on a sustainable upswing, especially the focus is here on the U.S. domicile deals. I think forthcoming is going to be Ally Bank. I think the key is here Dunkin' Donuts going public, and some probably Facebook and Twitter. The key is really in the long run, if you do it correctly, IPO investing can have a great asset allocation benefits, and we show that with our approach, actually.
You mentioned Facebook and Twitter. Obviously, everybody's ears kind of pop up when you say that. When do you think? How big will they be? What are we talking about?
We talk about 3 to 6 months down the road. We talk about, again, companies which want to be valued at $10 billion like Twitter, or 20, with selling just a little bit of shares. I mean, I think the big key test will be the Facebook IPO. If Facebook wants to be valued at 80 billion, if they sell just 10% or 12%, it's going to be a $10 billion offering, similar to the size of Glencore. And I'm kind of questioning the valuation here, because it's hard for me to imagine that they can place $10 to $12 billion and collect this type of cash from investors around the world.
So you don't think Facebook would be able to value itself at $80 billion and sell 12% of the company? 20% probably out of the question.
Yeah, I think 20% out of the question. I think a lot of this type of valuations are driven by buy-only activity in the pre-IPO markets on shares post and so forth. And I think that's really, in my opinion, the big risk for long-run IPO investors in these type of stocks that you buy into companies which are fully valued.
Talk to us
at the IPO.
Talk to us for a second about your index and ETF here, which you put together, I believe, as part of your dissertation, and that's what makes up your company now.
Correct.
How do investors then invest in IPOs? I mean, what have you put together for people to use here as a tool?
See, what we really define IPOs is, trading within the first 1,000 trading days in the market. We seek to capture the going public effect of the largest IPOs, which have certain criteria. So we started our investment products in 2004, 1 month before Google went public, and our US product actually has outperformed the S&P 500 by 12,000 basis points, since the launch in 2004. And it's really a systematic, process-driven approach by investing in the largest IPOs, respectively, which have certain criteria, such as higher float of more than 15%. They need to be larger than $50 million in market cap, and they also need to be underpriced, less than $50 million. And it's really a buy and hold approach, to the largest IPOs like the, Philip Morris's, Visa, MasterCard, the Googles, the CMEs of the world. And when you combine this group of companies, you end up with having actually a great asset allocation approach to the IPO market, which works much better than trying to pick your extreme winner, but actually you get a high probability of default in your IPO investing.
Okay, Joseph, thanks very much for stopping by.
Thank you.